Now, will they revalue gold? Look, it's valued at 42.22 on the balance sheet. They could market to market at where we are now, 2,900 and change. That would inject, 7 or 800 billion into the Treasury. What if they were to market much higher? What if they were to market to $40,000 is a number I see a lot of people talking about, which would represent somewhere in the neighborhood of a 40% gold backing based off of M1. There are people saying 24,000. There's all sorts of numbers, but you know this, that every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear for every $4,000 increase. Now, it wouldn't be that difficult. Trump would tell Scott Bessent, the Treasury Secretary, to instruct Jerome Powell to revalue the price of gold. And that is what it would be.
Gold prices recently reached a historic high of $2,940 per ounce, pushing its market cap above $20 trillion for the first time. This surge is primarily driven by fears of a potential global economic slowdown, particularly due to rising trade tensions between the US and Europe. While demand for gold as a safe haven asset plays a key role in this increase, analyst Andy Schectman, CEO of Miles Franklin, points out that the revaluation of the U.S. gold reserves could be a major catalyst for even higher prices. Schectman believes that this revaluation can potentially drive gold prices significantly higher. The U.S. holds the largest gold reserves globally, totaling 8,133 metric tons. However, these reserves have been valued at just $42 per ounce since 1973, which places their total value at around $11 billion. If the U.S. were to revalue its gold holdings at today's market price of approximately $2,900 per ounce, the value would surge to an astounding $760 billion. This boost could provide the U.S. government with various financial options, such as selling off a portion of the gold to reduce the national debt, or using it to establish a sovereign wealth fund to support national priorities. Although Treasury Secretary Scott Bessent has downplayed the possibility of revaluing the gold reserves, stating that it's not part of the administration's plans, the discussion emphasizes the growing role of gold as a financial asset and a geopolitical tool. The idea has sparked considerable debate, with proponents arguing that such a revaluation could positively impact the nation's finances. However, before any revaluation can happen, there is the question of verifying the actual existence of these reserves. The U.S. Bullion Depository at Fort Knox, where much of the gold is stored, has only allowed limited inspections in its history. Recently, Elon Musk proposed an in-person audit of Fort Knox's gold as part of his Department of Government Efficiency. The outcome of this audit could either boost confidence in U.S. finances or lead to significant market reactions. If discrepancies are found, it could send shockwaves through global markets, adding further momentum to gold prices. We present the clips of Andy's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There's been this talk of, as the price of gold has gone parabolically higher, that there's been profit taking coming out of GLD, as we've seen shares being sold off. And the conventional wisdom is strong interest rates, rising dollar, profit taking, Trump trade, risk on, NVIDIA, Bitcoin, etc. 16 tons of gold worth of shares have left. I say bullshit to all of it. That's not what happened. What happened is what's called share redemption by the banks like JP Morgan, who can redeem those shares, pull the metal out, and do so in a very, very private, opaque manner. And this has been going on for a very long time. So what you have, in essence, is JP Morgan, I believe, amongst others, pulling that metal out before something, whatever that something is, happens. And, when we talk about gold, it's no coincidence that it's the only other tier one asset and in the world next to U.S. Treasuries. And when we see that the central banks have been buying it really since 2017 in an unabated fashion, except the U.S. hadn't taken part in any of that until recently. And I think it should not be underestimated, the fact or not taken very seriously, that we've become a net importer since November. And to see this inflow and these massive deliveries and these massive deposits, and JP Morgan controlling GLD and SLV, and Judy Shelton, gal who I did an interview with, who was Trump's nominee for the head of the Federal Reserve in 2016, she wasn't confirmed, but she's far more qualified, I would argue, than Jerome Powell in the respect that she is someone who understands Austrian economics. She is incredibly well versed in Keynesian economics, but favors Austrian. She understands gold. And she said to me, Andy, we discussed Trump issuing, he and I discussed him issuing gold-backed treasuries in 2016, the 250th year anniversary of the country. He will issue treasuries collared to gold, redeemable in gold. And if you read her book, you'll see she also advocates for shorter duration treasuries doing the same thing. But she mentioned to me on our interview, 50-year is something she is very confident he will issue. I said, Judy, do you, and this was about a month and a half ago before all the talk of Fort Knox, I said, why has gold not been audited, really audited? And she says, it's pathetic. She said the United States should have no problem spending a few $1 million and dealing with the logistics, because she said it's pathetic. They always say it's too costly and the logistics are too difficult, as some is held in West Point Mint, as some is held in Fort Knox, some is held at the Federal Reserve Bank in New York, et cetera. All of the excuses are stupid. I said, gold is held, Judy, in an account called the gold revaluation account. You familiar with that? And she said, yeah, actually, that's an interesting name for the account. And what's interesting, I've been saying this for 2 years, Danny, since the head of the Dutch National Bank has been saying we should revalue our gold. That is held in the gold revaluation account, still valued at $35 an ounce in Europe. Nixon, when he closed the gold window, revalued gold from 35 to 38 in 1972, and then from 38 to 42.22 in 73. So there's two examples of gold revaluation, and gold revaluation over my shoulder. When Roosevelt confiscated gold in 33, it was $20.67 an ounce, I think they paid. The gold coin over my shoulder is a $20 gold coin. So everyone made 67 cents for doing it. Seemed like a good deal. When a dozen eggs is a nickel, that probably is a good deal. And then he devalued the dollar immediately by 40%, pushing gold up to 35. So gold revaluation is something that is, it's not without precedent. And I said, look, you even got members of the Bundesbank advocating for it. And now you have Senator Loomis from Wyoming, who spoke in Tennessee after Trump at the Bitcoin meeting, advocating for revaluing the gold held in the gold revaluation account. I can't make that up. That's the name of it on every central bank balance sheet, and revaluing it in order to provide enough liquidity to buy some Bitcoin for the strategic account. So I'm not saying they're going to revalue gold, because I don't know how this all plays out. And what I will tell you is something big is happening with gold. It's much bigger than I think the talking heads are talking about. It's much bigger than Trump tariffs. I don't think it's just playing the arbitrage between the spread between London gold and New York gold, which is 20, 30 bucks higher in New York, signaling a massive shift to get gold. Look, you have these unallocated positions that need to be backed. It's put London in a very precarious position. London is supposed to be a T+1 delivery, where your trade is T Monday, +1 is Tuesday, Wednesday you should have your gold. They're now T+6 to 8 weeks. They say they don't have enough manpower or enough trucks. I mean, what kind of crock of shit is that? The Bank of England doesn't have enough trucks, you're telling me, right? So this is all, there's a lot of supposition. I understand that. There isn't anything definitive, but what I will tell you is that what is happening with the gold imports into the COMEX and all of the movement around the periphery is so far outside the realm of anything I've ever seen that I tend to believe that it's something bigger. My guess is that this is gold that they would want to use for Judy's plan.
In many of his interviews, Andy Schectman warned about the shift in strategy among the world's most well-financed and informed traders, central banks. These institutions have been reclassifying gold as a Tier 1 reserve asset, which has significant implications for the gold market and global finance. Central banks have recognized gold's value as a hedge against economic instability and currency devaluation, and this shift is part of a broader trend of increasing gold accumulation. In 2024 alone, central banks bought over 1,000 tons of gold for the third consecutive year, showcasing the growing demand for the metal as a safe haven asset. The National Bank of Poland was at the forefront of this buying spree, adding 90 tons to its reserves, while the People's Bank of China followed suit by purchasing 5 more tons in early 2025, bringing its total holdings to a massive 2,285 tons. This continual accumulation underscores gold's rising prominence as a crucial financial asset in times of uncertainty. Schectman points out that this strategic move by central banks isn't just about buying physical gold for its intrinsic value. It's part of a long-term strategy to diversify their reserves and protect themselves against the risks tied to their monetary policies. As central banks have historically relied heavily on fiat currencies, the rise in gold accumulation signals a clear shift away from these traditional assets. Let's get back to the video.
That to me is where it seems to be going. Now, will they revalue gold? Look, it's valued at 42.22 on the balance sheet. They could market to market at where we are now, 2,900 and change. That would inject, 7 or 800 billion into the treasury. What if they were to market much higher? What if they were to market to $40,000 is a number I see a lot of people talking about, which would represent somewhere in the neighborhood of a 40% gold backing based off of M1. There are people saying 24,000. There's all sorts of numbers, but you know this, that every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear for every $4,000 increase. Now, it wouldn't be that difficult. Trump would tell Scott Bessent, the Treasury Secretary, to instruct Jerome Powell to revalue the price of gold. And that is what it would be. Yeah, I mean, the public usually is so far off the trail. It's not even funny. You have the most well-informed traders in the world scurrying to acquire and repatriate gold, put it in their own possession. And the public is in the chasing the Trump trade, the risk on trade. And the funny thing about that, you look at it, it's the exact same thing in reverse. Gold hasn't had a down week in 2025. It's up 8 weeks in a row, you would think. And seeing what we're seeing here, where the most massive inflows in the history of the COMEX market and deliveries, the biggest deliveries in the history of the COMEX market are happening, the public's chasing the other side. And as the public is chasing the other side, you have I'm talking record insider selling, where for every one purchase by an insider, 6 are selling. And it's really like increasing the insider selling. The public has been misdirected, and that's exactly right. And look, gold isn't sexy enough. It was up 30-40% over the last 365 days. No one notices it. It's up 9.9% annualized compounding since 2000. No one notices it. It's not the triple digit gains that we're used to seeing in cryptocurrencies and Nvidia and so it's gone unnoticed. Largely, the volatility, the counterintuitive price action has made people not notice it. And that's exactly how the big money wants it to be. They can short the price. They can do it in a counterintuitive manner when it should be going up. They can make it volatile. The public just breezes right by it and moves into this euphoric dopamine-laced Trump trade. And I think it's very ominous when you look at the setup. Look, gold was up 27%, I believe, last year. But over the last 365 days, that's much higher as it's gone up recently. So look, the public is largely missing this, and it's a contrarian indicator to the nth degree when you see a scurry by the biggest money in the world. And really, it's been going on for quite some time. The central banks, to me, are not just the most well-financed traders, they're the most well-informed. They know where this is all going. And you wouldn't see them doing this, let alone reclassifying gold as the world's only other tier 1 reserve asset, if it weren't very important. Central banks don't do this kind of stuff just for the hell of it. So to me, that's a contrarian indicator. Insider selling dominating the equity market where the public is piling in. and the insiders gobbling up and standing for delivery in gold as the public is not. And so that's how it works. That's why so few people ever get ahead in investing, Danny, and understand and read and prepare so that you too can sound articulate and well-informed. Well, that's a lot of effort, as you know. It's a full-time job, I think, as you found out. And for most people, just making ends meet these days is hard enough. And then to try and figure out the financial side of things, if all you do is watch the mainstream, you may be well-read, but definitely reading the wrong stuff. And so in order to understand what you and I are talking about here, you have to break free of the mainstream. You have to spend time with alternative media. You have to trust your gut when your financial advisors and your family and the TV is saying you're an idiot. But are you? It's slow and steady. The tortoise wins the race in the end. And gold's been 9.9% and completely disregarded as an archaic relic of the past, because we're in this instant gratification is not fast enough environment in this country, which is very, very, very dangerous, in my opinion. And when you look at the metrics, which would tell you that the markets are completely oversold, I've never seen anything like it as well. I mean, every single metric, from the CAPE to the price to earnings, I mean, there's like 10 of them. They're all flashing red, that this is wickedly overvalued and the insiders are selling. It doesn't surprise me. Most people won't react until they have seen something that makes them react. And to do it on their own is 1 out of 100 would do that. So it doesn't surprise me. To me, it's a contrarian indicator more than anything. But you're right. It's not where it should be in relation to the environment we find ourselves in.
Despite gold reaching all-time highs, the general public remains largely unaware of the underlying dynamics, with well-informed traders quietly acquiring and repatriating gold, while the masses focus on risk-on assets like the Trump trade. Gold has seen substantial gains, up 30 to 40% over the past year, and compounding at nearly 100% annualized returns since 2000, but its counterintuitive price movements have kept it under the radar. Meanwhile, while central banks, including the People's Bank of China and the National Bank of Poland, have been reclassifying gold as a Tier 1 reserve asset, the market is poised for a major shift as central banks continue to build their gold reserves and insiders unload their equity holdings. The public, distracted by short-term speculative assets, may miss this crucial trend as the increasing accumulation of gold by the well-financed elite suggests that gold's value will continue to rise, potentially reaching explosive levels shortly as more people catch on to its true potential. Share your thoughts on Andy's analysis of gold revaluation and price prediction in the comment section below. If you find this video informative, don't forget to support your finance log team and turn on notifications to stay informed about our latest videos. See you in the next video.